Hello traders, good morning. How are you? Vladimir here, and this is weekly forecast for a week starts on 11th of September 2016. Last week was, well, how to describe that? It started with anti-dollar movements and ended up with very strong dollar movements, mainly versus the majors and also mainly on commodities and indices. Now, as you remember, the last week we have been talking about this situation that until next Wednesday, 21st, I think it is, the market will do exactly that. 1 week up, 1 week down, 1 week with the dollar, 1 week versus the dollar, and will that actually what happens, and it makes sense because the cards are in Fed's hands, right? And what the Fed will do, that will be probably the next direction of the market. And until then, the market is just preparing the ground. Every rumor leaked, and we see dramatic moves. Last Friday, it was one of the Fed members, Boston, from the Boston place, and the hint that if the Fed will continue to hold the rates very low, that will end up very, very bad. That's pretty much what he said. And that affected dramatically the market by increasing the expectations of the Fed taking an action on this meeting to come on September. Now, there are a lot of doubts why the Fed would do that, but there is one thing why the Fed still has to take an action, and the investors and the traders start to lose their faith in the ability of the Fed of taking some serious steps and not just quantitative easing. And that's a bad thing. That's what none of the Fed members want to happen. Actually, Fed has to show his strength, has to show his ability to work and to fight when needed, and many hints on the past saying that we will increase when the right time comes. That's the right time. The economy cannot be better in terms of data to make this move. But that will very likely have effects that could make dollar very strong on the short period, of course, versus almost all the majors. And in reality, make the commodities and the indices lose their values again on the short term, but it also will start to show to the other countries that if the Fed is able to hike the rate, maybe they should, because no one really wants to stay behind for too long, right? That could be very, very bad and devalue the currency's values very seriously. So this is going to be very interesting period. That's for sure. And on next Wednesday, not the one we have this week, the week after, the Federal Reserve will announce their decision about the rates, and it will be very, very interesting to see what to come. According to the last leak news from Friday, the Fed is ready to increase. That's very likely what will happen on the beginning of the week. But we have to remember, as long as we are on a rumors period, everything could happen, right? Every news can take it this or other direction. Anyway, as for now and as for us, we are probably on a dollar movement, at least according to what related to commodities and indices. Maybe versus the currencies will be a bit different. So let's go over the opportunities we have, technical, and see how we can still enjoy from them. And what can we look for? Silver, last week, you remember we have been talking about it, and we said that the silver broke this trend line, which now brings us back to this trend line. If it will manage to break it and break above the last highs, we can talk about buys again, but it did not. What it actually did, in fact, was spiking down from the trade, holding from the trend, holding bearish hidden divergence. Now there is interesting thing, because we had a triple movement up, which means theoretically we should be able to get it down as low as 250. That brings us back to 1750. We have a trend line going for a long period right here, and that brings us again to pretty much same level. And if we start to measure the current cycles, what can we learn? That we have 161 expansion right there, and we have a duplication of the current cycles here also on the same place. So if we if we want to summarize that, this is our monster zone we are very likely leading to. So we can go and start looking for sales. This is our trend line. We drop down to 4-hour chart or 1-hour chart, and what we can see there? We can see there that we had here one leg. Now we have one big. Very likely we will have one more like this. Pull back and sells again. So for us, every rally towards I would say 1930 up to 1960 would be great sell opportunities. This is the current move down we have, so if we can get closer to that, this is a very good sell opportunity, aiming this zone we have been talking about in below 18. So that's really one good one to follow. Gold, basically same idea. The gold had 61 expansion of this cycle, right? As you remember, of this double cycle, and now still has the room to correct itself up to here, down to here. Sorry, that's 1290. Is it doable? Answer is of course yes. But here comes the but. We had one false break on the top and now one false break on the bottom. There is a chance that if we will just move according to rumors, that we will just remain inside this range. Anyway, it still gives us this direction. And what last week on Friday, I was looking for buy opportunities. But after this break of the trend line, we moved to break even for one reason. It started to give us a convergence. That was the convergence. Okay, the breakout and the breakout. That was a good time to break even ourselves. We were in 1333 right here. It was a good place to break even ourselves, because if it is a real breakout, we would be running. If it's not, we will create lower lows. And this is how we free the risk for ourselves. Now that's what's happening on the gold. It has a trend line still going down. It has a bearish hidden divergence still going down. 4-hour chart, we saw two waves up without divergence on this cycle, but in divergence on this cycle, bearish hidden, and from here as well. Well, that means that this was only a correction, not a cycle by itself, but only a correction to the previous cycle. That's what it is. And now we have a triple cycle on the 1-hour chart. That means there is a chance we are going to see triple or special. If this is triple, this is what we should get: a break above the trend line, pull back like to this area, okay, like 1340, which from we can start looking for sales positions with the break of the last trend line to be developed on the correction rally. Okay, not always corrections happen in rallies. It could also start to make for us some range, something like that, and then continuation. That's also doable. But there is a chance that we will develop not just a triple cycle, but a special cycle, which means this is doubled correction and one more. Okay, that is doable. And if it will do that, we can start looking for short-term buys and longer-term sells. Down to where? Down to at least this range of 13,000, 1305, 1300, sorry. And if you break below that, remember the 1250 we have been talking about. It is doable. On the weekly chart, this is going to be right, the first target will be right on the trend line, and if we manage to break below that, that will bring us down to the lower Bollinger Band, which again technically is more than doable. So as for now, short term, we are after sales. This is the current trend line developing. If we can get closer to that, we will be looking after sales. Not blindly, okay? But we will want to see the rally. We will want to see breakouts, and this would be our minimum risks, maximum potential profits. That's what it is about. Remember, guys, I always say that, and I always will. We are not after being right, we are after making money. No one cares how many times you, me, or anyone else right. We are here. Make profits. That's what it is about. That's what trading is about. Not being right, make profits. That's commodities. And this week I start with commodities and indices because, well, that's where the action is. S&P. Look how hungry the bears were. They were sleeping their sleep. This year it wasn't just winter sleep, it was summer sleep. They were just looking for something. And look what happened in one day on Friday. Boom. Monster move of 60 points. That's could be even unbelievable. Look on this weekly monster candle. Now, I have been talking long time ago about the cycles we have on indices, and mainly on the S&P. We said not once, well, 2200 up to 2400. That's a monster cycle area. Later or sooner, with or without a Fed, move will start. Now, there is a very, very big chance that if we will complete this monthly false break, that the celebration will start for long term. But the month is just on the beginning. The Fed still has what to do and what to say. We should be taking a look, first of all, on these two cycles. These two cycles should correct themselves towards 38.2. That means approximately 2050. Could be a bit higher, could be even a bit lower. That's all fine, that's all correct, technically, and everything else. And then we will have to see what the Fed will do. Not increasing the rates could easily make this impact. Easily. Which actually, if you remember the monthly cycle, we have been talking about long time ago. This is where we get our 161. So we can still dance around the top. It's still doable and still could be classical. Now this is potential special cycle, which means again, we still can play here before this leg to come on the future years. And yeah, I know it's very, very, very far right now, but this divergence, later or sooner, will make the dramatical change. So basically, that's what could happen, as mentioned. We could see the correction continuing. Okay, so basically, seller rally is still good idea until the next Wednesday, and then if the Fed will actually disappoint and not take action, we could see monster reaction up. We have this trend line which we'll have to pay attention to and see how and what it does there. As I said, 2050, bit higher, bit lower. We'll have to see how it develops here around this area and what it does. It might reach this zone and start to slowing down, okay, until the next Wednesday. So basically something like that. Okay, to this area and until there, and then neither fly or crash. That will be after the Fed. So that's basically all. Sell rallies is still the thing to do here. The problem currently, the stop losses, so they're huge. So basically, what's normal to happen in such a situation is something like that. And then on this rally, you can start looking to sell the short-term rallies, protecting the last top, and then that could be still giving good risk reward, because currently risking here and protecting all that is really ridiculous. Doesn't make any sense. DAX is moving down as well. We have a bearish hidden divergence that was kind of expected here, but again, all that will rely on what to come from the Fed. According to the cycles, we have all the reasons. Just want to remind you what we have here. We have the 161.8 expansion here. We have the 161.8 expansion here. Okay, this was the monster area. So that's double cycle, which means we could easily get as low as to 38.2 of this one, and basically even the 50. That's more than doable, as it's double cycle meeting. So that could be a monster here. Now on the weekly chart we had double, which means there are all the reasons for further sell continuation. But that also will rely on the Fed. We know that. Now on the short term, in a very short term, we have a special cycle here. Now we can go and get it corrected towards here, at 10,000. So basically, looking for sales is still the right thing to do. On the 4-hour chart and the 1-hour chart, we start to develop some kind of movement like this. Oh, rallies toward that on the short term, and we can try the sells. 2 waves, that's what we need. Okay, 2 waves. And we have also broken trend line on the upside here. So basically, corrections, breakouts, and we can try out the sells again. Those of you who are sell, oops, and of course those of you who are in sell already, just remain there. Oil, well, this was a very nice movement out there, right? Again, exactly like all the other commodities, if the Fed will do their move, oil to complete this. If the Fed will not, oil to remain in this and fly for second leg. Currently, only currently, we have double here. Okay, this is the one I referred to. 2 cycles down, 2 cycles up, and we can easily expect that to continue further down. We did have a divergence here as well. We do have a beautiful bearish hidden divergence here, so sell rallies still sounds as the right thing to do. And as long as we remain below these highs, we can look to sell rallies. But again, it's tricky right here. You can see how sensitive it all could be related to the Federal Reserve news to come. And the more serious the more serious the rumors would become, the serious these moves would be here as well. Anyway, remember what I always say, our goal not to be right, to make money. How do we make money? We choose the ones that could pay us the best risk reward. Okay, remember that. And now back to Forex. Let's take a look what is happening here, and there are a lot of things happening. So let's start to cover them. Pound dollar. Are we after 136 or are we after 125 or 120? Basically, technically, we have all the reasons for both. This still holds the range, break below this trend line, and we can start talking about a continuation down for new bottoms with the Federal Reserve to increase the rates, if that's what will happen. If not, we are after this. Okay, now let's put the cycles on and let's see what still we can do. Okay, if we take a look on this cycle, 161, it is slightly above the gap. That means We could rally towards 139, 140, very doable. Or at least towards the 136, which is close the gap. It's still doable. If we take a look on the last cycles developing, same story. The 100 is very here. But 161.8, again, it's a bit above the gap area from the Brexit period. Now the question is, where we go from here? On the 4-hour chart, the very short term, we didn't have a special cycle rally. Now we correct it also. That could turn to be into kind of triple here. That means we have daily 20 MA next to 132 approximately. We have the trend line on the 4-hour chart and also the daily chart, holding us exactly on the same place. We want to see that being reached. After that, we will have to see what's coming. And I believe a mess is what's about to come. But we still can enjoy from some short-term opportunities, right? If we take a look on this view, we can start to look one false break, two false breaks, gaining momentums by higher highs, pullbacks, and try this correction. That's doable. We can still move in some kind of a range, right? Until the very same moment of the Federal Reserve to come. And that's something to remember. And we will want to see action, bullish action, from around 132. That could be a bit higher, that could be a bit lower, but this is our place. This is where we will want to get an action. And this is where we will want to get involved as well. So paying attention, that could be our actions on 132. We want to see false breaks, finishing these bottoms, gaining momentum by creating higher highs, even if it's lower time frames. You can drop down to lower time frames, like 15 minutes. That's fine. Of course, we want to see the false breaks, right? Gaining momentum by higher highs, pullbacks to minimize the risk for us, and jump in, looking for what's about to happen. Okay, with risk reward in our favor, we don't have nothing to worry about. And here comes the euro. Euro, we had Mr. Draghi and his speech. We gotta fly towards last highs 113 plus. That was very nice move. The biggest question remains, Draghi did not do nothing. He said that the central bank will do whatever it requires, blah, blah, blah. No actions, moving the ball towards the Fed. We still have here trend line broken and retested and respected. We still have this trend line retested. Does it worth to trade on the euro dollar? I don't think so. This is not a real low to be considered as broken place. So we can still just continue to move inside this range it is creating. That's a bit ugly, but we can still look to try sells. Okay, on the short term down to here. That is still doable. Okay, but as long as the trend line holds and bottoms holds, for us, we can still try to short. How? Like this, breakouts, and we can try this short. Or alternatively, if we reach the bottom, try to switch and go longs. And that's basically how I expect everything else to play in this area. Seriously. That's how the expectation is going to be like. Moves are going to be tricky. And they could suddenly gain momentum and slow down suddenly. So once everyone jumps in, boom, nothing is going to happen. That's how, in such plays, that's how things could happen. That's the expectations to the Fed. And that brings me to the Euro Pound, which so far does exactly what we wanted. So basically what it does, let's go over that. We have two down, which we can separate into special as well. Doesn't really matter how we count that. We now have this correction. So we could see one more push, one more play, and then one more low to 81.40. Daily chart though offers a possible head and shoulders for us. So we can still play around this zone of 0.85 plus, maybe even higher, breaking looking for shorts right from there, breaking and holding above it, and we switch for one more possible buy. Because here it comes, because we have two moves up on the weekly and the daily. The first one was corrected by double cycle down, which means the current top could finish with a range. We had one false break on the top. We could still have one false break on the top and then continue to move inside like this. So if we break above the 085.60, I would say, and hold there, we are going for 088, which from we would be after monster sells, of course. That's for the euro pound. Let's go for commodities pairs. Aussie dollar holding their top, and if that's about to remain this way, we are going to here. And as I said, for long run, I will want to look only for buys. Only for buys. That's for long run. On the short run, we still hold the tops. We still hold the trend line. And on the 4-hour chart, it was a fake breakout up to here. Right now, we have a bearish, bullish hidden divergence, pardon. And basically, we should be looking for sell rallies. The problem here, there's only one problem. The moves are huge. Stop loss currently is impossible. So what we will want to see is from here or lower, we will want to see the Aussie dollar fixing itself, and then we will want to see this mirrored. Mirrored like means that the length of this period should be the length of the correction. We will want to go sell rallies. We are probably after the 50 of this triple cycle, which is not far by the way, it's rating very close, like 074.50, even a bit lower. Okay, this is the place. This 1, 2, 3. Sell rallies would be really good opportunity. Back to 076. That's what we need. That's what we want. There, we will be looking for sell opportunity. So if we can get this, we will be looking here on false break, momentumal change, and sell opportunities. Expecting one more push down. Okay, so let's see. We are aiming 074.50 on the short term, and on longer term, if the Fed will increase their rates, we could expect of something like 073, 071 zone, where from again I'll be looking for buys. So on the short term, we want to go sells around 076 approximately, but basically the main thing for us would be to look and to make sure we are holding the daily range idea so far. Okay, with the false breaks, it's 1, 2 here, so it's a bit ugly, but this is basically what we have. We will want to make sure we are holding this, or even at least this. Okay, so 1, 2, right? We have kind of a trend line here which is holding. We have this trend line which is false broken, so it's still relevant for us even to consider on something like that. So we will want to get rallies and go for sell, and that brings me to the New Zealandian dollar, which technically has the reason for a high 0.76, which will be reached if the Fed will actually not increase the rate. Will be reached. Okay? It's still doable to get it here before the sales. But we cannot also close the eyes in front of what happened last week. We have a gap of 0.7280, which will probably be closed, very likely by the beginning of the week. And from there, we could expect for some kind of short-term pullbacks, just to get the continuation, very likely. So on the 1-hour chart, if we can get, we are now building here some kind of special cycle here. That's what could happen. Or alternatively, we could build up a triple cycle. So like this. 1, 2, 3. It's also doable. where from we would be start looking for divergences to take place, right? False breaks to end this craziness, momentum will change, pullbacks, and we will be looking for possible longs again. All that would be on a short-term fights, expecting more and more and more rumors to take place. Just 1.5 week left, right? And that's how it's going to play. After that, we will probably get the definition for the next trend. Dollar Canadian, same story. Bouncing and still holding this range, the daily range. Still didn't break lower lows on the daily chart, so we cannot gain no momentum here. We still possibly after 135, 136, 136, if the Fed will actually increase the rates. But don't get overexcited. We still need breaks. We still need confirmations. We still want to go above this high, get lower again, and jump in a buy. That's the only way to act. So we want it to be broken, and only then looking for possible buys. On a short term, we can try the buys, but it will be risky. And here is how we can do that. We expect this, right? 1, 2, 3 to break above this high. From there, probably corrections by next Wednesday, right? And then this decision period after the Fed. So on a short term, if we can get it like this is the last trend that we have, right? Oops, sorry. This is what we have here developing, right? And this is the last rally. So if we can get down to, let's say, 130.10 or 129.70, we can look for possible buys versus this bottom against the trend line, expecting these highs to take place. That's possible. If we can get a good risk reward there, that's more than doable. Dollar yen, another one that could fly if the Fed actually will take action. And this is what I will be drawing. We have a trend line here which is so far holding. We have this trend line been broken. I would definitely want to see the triple cycle developing on a 1-hour chart going and be retested. Okay, so I would want to see that back to 102, bit higher, bit lower, and look for possible buys with the break of the last trend to be developed. Okay, as long as this trend line holds and the last low holds around 101.50, 101.40, we can be talking about buys. That's the idea. OZN, well, so far following our plan from the last week of this possible range. And I think this is exactly what we are going to see. The 161.8 expansion is right there. And I believe we are going there. On the 1-hour chart, I was looking for possible sells, to be honest, but there was no divergence here. Which means, if there is no divergence, this is just a correction of the bigger cycle. Which brings me back to the conclusion that very likely we are going to look for sells. 100 followed by bullish possible divergence will probably get us short-term corrections, but we will have to pay attention to this trend line. If it will hold and the resistance we have here on this zone will hold, we can look for these corrections, breakouts, and sell continuation towards here 76.50. This is our zone we would be looking at. So that's another great opportunity which we can be looking to enjoy from. Should be really nice. And let me see my list. I have so many things on this week. European discussed. This one we discussed. Cat Frank also so far, as long as it holds this trend line, it's great for buys. But if we break below this support and trend line around 0.7420, that means we are very likely going for one more deeper. Okay, so that could turn to be something like that. Which from again we will switch for buys, monster buys, if because of the monthly and the weekly cycles here. We would expect this and fly. It will happen. Only patience and questions of timing here. That's all what it is about. Last one, Aussie Kiwi. Aussie Kiwi still dancing. I was looking at the daily chart here, and you can see that this one candle did not change nothing, which means very likely we are still dancing and playing around this zone. We are still dancing and holding the cycles. That's the cycles I refer to, of course. Okay, we have the 161.8, a bit lower here, but this is the one of the cycles. Daily cycle suggests us this. The 61.8 is right here. Okay, and this cycle expansion suggests it's on the same place. So that basically I wanted to cross below 102. Let it reach closer to 101. That's the action zone where we would expect that to stop and slowly build the reversals. Once this reversal is taking place, get ready according to the monthly chart to see a monster reaction, at least to the last top, probably even more. So that will take time. That will take time to build and develop, but once it does, boy oh boy, Euro Kiwi, another monster pair that could start the fly up. We still hold the 61.8. If you remember last week, we have been talking about that as long as it holds, we can easily, this is the triangle, sorry, easily get a false break with divergence, which we did. And on the 4-hour chart, we break above this trend line and it flies. So basically on the 1-hour chart, it creates for us right now a special cycle. We have this, and this probably will find the reason to stop here. We should get the correction, basically and ideally to 152 and lower. Get it there, and then we will be looking to buy with the break of this trend line. So short term, this is the gap that was closed, okay, and this is the resistance zone we have here where we got our sell opportunities to be taken on the short term. We want to see false break, one or two actually, because we go against daily, or at least one false break with momentum will change. So if we can get lower lows, then pull back, then we can talk about the sell towards this trend line and then switch for buys again. If not from here, a bit higher, 2 false breaks in a row, and we can talk about sell opportunities. Short term, only short term. Long term, retraces and buys. Voila, c'est tout. Thanks a lot, friends, for watching this video. I hope you enjoyed it. Feel free to ask your questions, leave your feedback. That's what gives me the motivation. I always say that. Leave your comments, your feedbacks, click the like, and feel free to share it with everyone who you believe can enjoy and benefit from that. Our goal is to help the traders to make some profits, basically, and that's all. And last few words. Last week, my Forex Libra code was launched, and it's going faster, to be honest, than I was expected. The journey is about to start there. I'm going to start building up my challenge and see traders progressing. I just want you to understand one thing, guys. I'm doing that for a reason. Those who successfully pass and prove to work well, I want them in the industry. I want to help them out. I want them to become traders, and I will help to bring in the best traders into the industry. That's the bottom line. Your success story, my success story. It works in both ways. That is exactly the reason why I'm ready to fight for the long term. Yeah, it takes time. I know that, and you should understand that. I don't expect you to be trader within a month or two. No, but I do expect you to apply the things I'm going to teach you and to become the trader you always wanted. So the journey is about to start. This week I have my very first webinar there, and I'm going to show you exactly how I trade my cycles, combining the divergence and convergence inside automatic mechanical scanning for false breaks and convergence principles, and show you how you can get trades with risk reward of at least 1 to 2, 1 to 3, at least, and sometimes how you can enjoy from risk reward 1 to 10, 1 to 20 even. And no, it's not a gimmick. It's not any like I'm trying to build you stories. No, I'm going to show you how you can get the monster returns I just talked about. And those of you who know me for long run, you guys remember the pound Aussie short we have been talking about from here, right? You remember that from from the monthly charts from here. Okay, we were talking about that from the beginning of the year as well, right? From pound CAD, we've been talking for shorts right here in the beginning of the year. You don't believe me? Go and look for the annual forecast. Take a look at my annual forecast and you'll understand. These are exactly the huge opportunities that can pay huge risk reward. And what good for weekly chart could be good as well on the lower time frames. That could be really game changer. And once you get this principle and understand how it could be done and why patience is key for waiting the opportunity and not jumping blindly in every trade, you will understand how the big guys are playing the market. That's all. So if you are up to this challenge and want to find yourself in the industry becoming traders, it's time to join the journey, and we started this week. And if you have any question, feel free to comment or ask me questions by Skype, by email. You know, I'm everywhere for you guys. On the blog, of course, you can find me on the blog, on the chat. This chat is open for you, so we are there. So I wish you a wonderful week. Great trading once again. Thank you for your time. This week was a bit longer, but I couldn't stop as we have a lot of opportunities building up. So very important to cover that all. Enjoy your week. Happy trading. Great opportunities to all of us and great returns. I'll see you next week as well with new weekly forecast. Thanks for your time. Vladimir Ribakov.